What was your take on the upward revisions of inflation and especially that GDP forecast?
Right. So we really didn't see any meaningful changes to the statement. So we saw some small tweaks upgrading recent activity, but nothing in terms of where the Fed is thinking that that outlook is evolving. So when we look at the summary of economic projections, that's where we saw the action. So you saw some significant upgrades to GDP growth this year. You saw unemployment falling at a faster rate and getting back to its pre-pandemic low by the end of 2023. And importantly, you saw inflation move up, where they're looking for core PCE inflation to get about 2.2% by the end of this year and stay at 2% or a little bit above in the out years. So they do expect that we are looking like they're on track to meet their goals of inflation moderately exceeding 2% for some time, but not breaking away, which kept the overall median for the dot plot in 2023, keeps most of Fed officials still on hold through 2023.
Yeah, important. You said most of Fed officials see it staying on track for 2023. Some officials pointed to higher rates. How do you think Jay Powell responded to that? And we're seeing the NASDAQ down about 1% in futures this morning. Do you think that the tech sector will continue to respond negatively to these rising rates?
Well, I think just looking at the overall outlook for rates and what that dot plot showed is it did make a nod to the fact that we are looking at a stronger growth environment. We are getting closer on the Fed's inflation goal, but we're still not there yet. And as the clip you played indicated, the Fed needs to actually see this progress. And so we're still a ways away from the point when we think that we'll actually get rate hikes. So we think that the Fed's on hold at least through 2022 through our forecast horizon. And even as the outlook has improved, it looks like Fed officials feel the same. And again, 11 out of those 18 officials are still looking like they think that rates will be on hold through 2023.
So we're seeing the recovery begin. Things are definitely picking up. How do you see the rest of 2021 testing the Fed's new framework?
Well, I think you'll really see that test when it comes to inflation. So we have a lot of price pressures building right now. Most of that's concentrated in the goods sector right now, given the bottlenecks in supply chains, the strong demand that we've seen in goods spending and transportation issues related to that, creating those supply chain bottlenecks. But we think that services inflation is going to heat up this year, as well as the economy more fully reopens, as you do have all this pent-up demand and consumers are flush with cash right now. And so you're really going to see it on the inflation front. But I think the key test will be what happens when we look ahead to 2022, 2023. Is this just a temporary pop, or is it going to be something more persistent that pulls expectations higher and the Fed actually has to address? Right now, the Fed is looking at as mostly going to be transient, that it's just going to be this temporary burst with reopening. But if we do see inflation expectations drift higher, and in addition to seeing actual inflation above 2%, then the Fed is probably going to have to address that sooner than they've currently laid out. But there's still a lot of uncertainty around that, and a lot could change in the coming months.
Shepard Smith here. Thanks for watching CNBC on YouTube.